Welcome to Caching Waves. This is an Elliott wave update for XRP. This was the video from yesterday, and pretty much immediately after it started taking off in its third of the third, which was nice timing that I was able to get this up quickly. I'm glad I did it when I did. So I suggested taking a long above the B wave, letting the market come to us, and stop goes at the pivot low whenever the low is in. If you made the choice to make that decision, congratulations, and I'll show you how I'm managing the trade from here. Okay, but a quick recap on the daily. If you're new here, we have as a multi-year triangle right here, contracting triangle. How this pans out is it's a series of three-wave patterns with lower highs, higher lows between two trend lines contracting. And when we finally terminate, labeled as A, B, C, D, E, we tend to get trend continuation in a very aggressive manner. In XRP's case, the trend is to the upside. Now, I am targeting all-time highs. I have gotten questions about my final target, but it's very wide, guys. I don't want to give an exact number, but it's above $4, below 15, somewhere in that range. I prefer to map out this wave count, and when I get a final 5 wave count, then I will zone in on where I think the actual high is. Okay, so this was the idealized view. This is how it actually looks. So we have our A, B, C, D, E. Now, we called this triangle way back in this zone. It was originally a nice setup because the stop was right here at the low. And as of right now, the actual triangle invalidation is at the C wave low at 28.72. So if for whatever reason we come up in a 3-wave, make a new low, the triangle is still valid until we break that area. But based on the news, the reaction we got off the low, I am quite biased that the triangle is complete if all labeled correctly, right? Okay, so we'll get to the smaller time frames. Okay, so this was our E wave low. We had this marked out as a wave 1, 2, 3, extended target to the 2.618. We usually look for the 1.618 taken from the beginning of wave 1 off of the top of wave 1, extended off of wave 2. That's where we look for a regular third wave. Extended is the 2.618. After our third wave, we got a triangle, A, B, C, D, E, a smaller version of what we saw on the daily chart, and our fifth wave to complete, a 5-wave pattern, which makes a larger 1, 2. So we have a 1, 2. We're currently working on a second 1, 2. So we'll have a 1, 2, 1, 2. Similar to this, 1, 2, 1, 2. I will map out those targets next video if we end up making this impulse, how high we're likely to go for our third wave. But as of right now, just focusing on the micro area, there's a lot that can still happen. This can still go against us, and I want to show you how to protect against that. So my big worry, if you remember, not a guideline, but a rule, sorry, not a rule, but a guideline, is if this is our fifth wave high, and this isn't some sort of complex correction, and our wave 5 actually ended over here, which I don't think so, but I have to stay open to the option. Then we had our ABC correction complete. What I don't like about that is usually I like to see the correction take in time of this entire move between the 618 and the 1-to-1 in time, which is all the way over here. I also usually like to see a minimum of 30%, which we didn't even get that in time, which is right here. So it just leaves me open to the idea that this correction, this could be mid-correction and we just get bigger. That's all it does. It can be a low. This can be a wave 2. Just usually we hit at least the 30%, like a large majority of the time. So we'll see what happens here, but neither the case. We did come to just shy of the 786, which is a common target for a wave 2. And it does appear like we're making an impulse, so we're going to go from there. Let's go down to the 15-minute. Don't need that alarm anymore. So I did exactly as I said myself. I'm on a different exchange than this labeling is on, but I took a buy right above this X wave labeled, like one tick above, and my stop was at the low. So I ended up, well, come on. I ended up taking the trade like this. Stop is at this low. So right now up about 3 units. I'll show you how I'm going to adjust that as well. Okay, so first of all, I'll have this as a wave 1, 2, 1, very extended wave 2. So this wave 4 can take a little bit of time. So we have a 1, 2, 1, 2, 1, 2, 3, 4, 5. There's our third in green. We're either complete a fourth, and we just had a sharp correction because we had a flat correction here. We had some alternation, or this is still mid-correction. I'm not sure which is which. Need to let this price action fill out. We can come up here, make some sort of flat, and then get our fifth like such. We could turn into a triangle where we get extended out, although I don't think so. It would have to be complete pretty much right now. A, B, yeah, because usually our usually our C or D wave is the complex wave, so it could be. But either way, I'm not sure which correction we're going to get. We're going to let it finish and see the reaction, but I'm aware of the flat we can get, so be aware of that, a running flat or a triangle. But important thing is we want to stay above this 50% retracement, which is the pull from our third wave in green. So what I have done, I'll show you that in a second. Sorry, first thing in the morning, a little bit tired, but I know I wanted to get this update out. So it looks like we possibly could be getting an extended third wave in blue. As you can see, we took the extension of the beginning of our wave 1 off the top of wave 1 off of wave 2 in blue. We look for our third wave at the 1.618, just like we did over here. We got extended clearly, so we might actually hit the 2.618 for this third wave in blue, which is at 68.84 cents, in which case we would get a larger fourth wave and look for our fifth wave to the upside. As you can see in the green measurement, we also take that from the beginning of wave 1 in green off the low of wave 2 in green. We also came to the 2.618 extension. So it looks like maybe we might get this 2.618 extension in blue. I'm going to have to target the 1-to-1 extension of the length of wave 1 off of wave 4 when it is complete. I'm not sure if it is yet, but if we complete it as just like a quick zigzag, which I don't think so, that just double tops us, right? So I assume there's still more to come in this correction. So as of right now, looks pretty good. Working on our fifth wave within our third in the impulsive count. But this is what I'm personally doing, because I've had these things turn on me all the time. So don't assume this is going to happen. Nothing says it has to. I put my stop a couple ticks just past the 50% retracement of this third wave. So if we just use, I go for guidelines in this situation rather than rule breaks, because in this case, I'll at least lock up like 1.5 units pretty much, right? As in 1.5% on my account. I risk 1%. So I'd at least lock up 1.5%. And if it ends up losing, at least you're still a winner, right? Now, absolute invalidation is this wave one overlap. But in an extended wave, if you have the option to protect yourself, I tend to do that myself. I know a wave 4 shouldn't come past the 50, and obviously 618 a lot of people use as invalidation. I do as well, but wave 1 is at the actual invalidation, right? But we look between the 236 and the 50, and you can see we hit our 382, so pretty much ideal. So that's how I'm protecting myself. My stop is just past this 50%. Now, how could this fail? That's the question, right? And how I would suggest it's possible to fail is if this is labeled incorrectly. Right here, this wave 1, and it's actually a 3-wave move. It's just hard to read. Even down at the 3-minute, it's very, very difficult to count it. Obviously calling it a 1-2-1-2 because of the second one too. But for example, if for whatever reason that's a 3-wave move, and it's not for me to say it absolutely is or it isn't. If this is somehow a 3-wave move, and we get a 3-wave move and a 3-wave move, it's WXY there, this could actually be a diagonal, right? I'll give it an ugly one, but I always look for every possibility. So if we happen to say that's a diagonal, that can easily be an A, B, C. That's why I'm protecting myself in just past that 50%. Can easily be that. In fact, if we take our fib pulls, where are we at? Looks like we're actually at a common target. If we pull it that way, we hit the 1.382 extension, which is a common target for a C wave for be in a zigzag, right? So this can be a zigzag as well. I'll give it, I think our count is much more high probability, obviously. I'm reaching for the fact that this is a 3-wave, but anyways, that's where I think we would possibly fail. In turn, if we did fail, what would my expectation be? My expectation would be what I talked about yesterday, which would be with our 3-wave move here, it would be a larger A, B, C if we happen to fail. That's just my current count on that. If this is an ABC, we'd have a W looking for a 3-wave move back. It can come pretty deep and get another 3, WXY. In this case, I don't want to hold through all that and give back all my profit. I would rather just take my profit here and look for a re-entry, right? Lower. But this is what I would look for if we happen to fail. Look for a B wave coming higher, C wave making our flat correction as a 333 or a 335 flat. And this would be very bullish once this C wave came out and finished. So quick recap, that's possible too. There's a lot of possibilities here, so don't think we're out of the woods by any means. I also noted, although I give this one quite low probability as well, but it does exist, so we have to at least keep it in our heads. If this is a 3, it could be an ABC, like we said. We've hit the 90% retracement of this A wave. In that case, that means we can have a 5-wave move down here. And this becomes an ABC. Although it might end up being some sort of diagonal. Looks like a 3-wave move. But anyways, that is possible as well. So you just got to keep that in mind. We have hit the 90%, potentially in a 3-wave move, although I don't think so, just potentially. So that can happen. So knowing all these things, that's why I protect myself just past that 50%. I am wrong on the bullish count pretty much there in my head. So why would I hold on to it any longer, right? All right, guys, but looking for this fourth wave to finish. It's either a triangle or a flat. We'll get our third. And same thing, once we get that third, I will re-pull the entire third wave and do the same thing. Put my stop just past that 50, right? And keep going. And near the top, I probably won't take profit if we do get this. I'll probably just hedge and look to actually position up on the retrace if we make another 1-2. It does look like if we hit this, though, we're just going to come just shy of the 1-to-1 extension, which I would prefer of this, of this wave 1 and 2. So this is a 1-2, and this smaller 1-2. So it'd be a 1-2, 1-2, and we come just shy of the 100%, which I prefer. We want to ideally break the high of this wave 1, make a higher high, and just come shy of the 1-to-1 ideally. I usually look for the 618, but it's fine. But even past the 1-to-1's fine. I just prefer a little less. Reason being, it's more likely a 1-2 in that case than like an ABC, right? ABCs, you look for 1-to-1, so a little shy is pretty much ideal. That's why we always look for the 618 extension. All right, I hope I didn't overcomplicate things. But anyways, that's what I'm looking for. Stops. Entry is like this right now. Entry was like that. Stop has been moved all the way just past the 50. Guaranteed profit. So your decision, I would suggest at least locking that up. I don't see any reason to hold it past that 50. So that's it for this one, guys. Thanks for watching. I'll see you on the next one.